Okay, so as I mentioned today, is basically we're doing a free class for something called Live Algo Hour. I'll tell you a little bit more about exactly what it is in a second. But this is something that we're going to be doing regularly every Tuesday. We're doing a free session now, but we'll eventually change that next week. But okay, so here's the agenda for today. So first of all, I want to give you a quick introduction. Just kind of in case you guys haven't heard of us before, or you haven't seen me before. Then we'll talk about how Live Algo Hour works, how today's session is going to go, and how every session going forward is going to work as well. Then we're going to do a review of some of your algo suggestions. Right, you guys submitted a bunch of really good ones. I'm going to pick one today that's just a little bit easier to do because today's going to be a shorter session than usual. But it would be great to discuss some of the ones that you guys showed, which I thought some of them were really cool, and I'd really like to try them out. Then we're going to go into building the actual algorithm itself. So you'll be able to watch me build an algorithm from scratch, right? Something that works and hopefully makes some money, right? We're not always going to be able to find something that makes money, right? That's just the nature of it. You're trying things out, testing out an idea. Sometimes you'll hit an idea and strike gold. And sometimes you'll find out, you know what, maybe this isn't a good thing to do, right? I think both are valuable information, right? Because if you're going to be trading a strategy and it's not a good idea, if you back test it and it's a bad idea, then you're actually saving yourself some money by not doing that, right? So either way, we're going to build it. We're going to take a look at the results. And we're going to try to tweak it as well, right? So if we get some good results, we'll see if we can make them better. If we don't get good results, we'll play around with it a bit and see if we could figure out how to make this algorithm work and actually make us some money, right? Then I have a question section at the end, but feel free to ask questions throughout. I'm going to be going back and forth from the chat. So if you guys have any questions, please feel free to put that into the chat because it's a lot more interesting when this is an engaging session. In the future, by the way, right now we're running this through Circle. You guys are all logged into Circle here. This is that thing, right? You could type your questions here. For future live algo hours, the ones that are going to be paid, those will be done through Zoom. So you guys will be able to actually share your screens, all that sort of thing, which is one reason why we'll be able to do more complex algorithms in the future as well. So you guys will be able to share your screen, show me on a graph. This is what it looks like. It'll be a lot easier to communicate around that. All right. Okay, cool. So let's get into the introduction. So first of all, who am I? What is Lumi Wealth? Why do you care about any of this stuff, right? So first of all, my name is Robert, right? I'm the CEO of Lumi Wealth. We started this company something like 4 years ago, and really we're dedicated to basically helping people earn money using software, right? I have a strong belief that software is automating like everything in the world, and investments are no different, especially when we're looking at things like AI and how advanced this stuff's getting. I have a very strong belief that no human being will be able to outperform a computer very soon. It'll be very, very, very difficult for any person to be able to trade better than a computer. We've seen computers basically win at chess. We've seen them win at Go. The next step is going to be winning at the stock market. And arguably that's already happened. If you look at some of the hedge fund managers, people like Jim Simmons, they are just astronomically successful, making like 60, 70% a year every year, pretty much. They very rarely lose money. So if you look at someone like that, who, just runs trading algorithms only, and they've been doing this since like the 90s, if you look at a hedge fund like that, you can think, well, maybe computers are already significantly smarter than humans in investing already, right? So anyways, that's what Lumi Wealth is all about. That's our belief. And we want to basically bring that software to the world, right? We want to make this as easy as possible to build stuff on and get more and more people involved in algorithmic trading, right? So that's what Lumi Wealth is about. Who am I as part of that vision? Well, I've been programming for most of my life. Actually, I started when I was around 12 years old. It's been a very long time. Started my first software company when I was like 15. Made a decent amount of money then, got me really excited in that stuff, which got me to business school, which got me really interested in finance, which finance, I think, makes a lot of sense when it comes to software. There's a lot of numbers involved and a lot of money to be made, to say the least. So I really took a huge liking to finance and obviously software already. After that, we built another business, sold that one again, so had a couple exits. I moved to New York and basically got a chance to work at a bunch of different fintech companies on Wall Street, right? So we did everything from mortgages to crypto, high frequency type trading, got a lot of experience in all this stuff. And it's always been my vision in life to create something where we can help people with their investments, right? And that's when we started Lumi Wealth about 4 years ago, and we've been making some very good progress towards that, right? And you'll see maybe over time you'll see how much more progress we've done. But really, we've come from a pretty nascent company, brand new, to having a lot of technology and a lot of really good algorithms. So definitely some really good advancements happening. So that's basically who I am and kind of our vision. Right now, we're spending most of our time building courses for people, right? So that you guys can learn how to do this yourselves. This is not the right website. So you guys can learn how to do this yourselves, right? And you guys can basically see, you know, how to create these algorithms. But we want to make this as easy as possible for people to do this as well. So we're slowly building out technology where you'll be able to actually do this stuff easier, right? All this stuff is taught in our classes, right? So if you're interested in taking some classes and learning about how to build these trading algorithms, you might want to take this algorithmic trading course, right? On our website, it's going to courses, algorithmic trading. This is kind of the backbone of our company. And if you want to learn about how to build this stuff from scratch, this is the course to do it, right? The course that we're going to be going over today is right at the very top, called Live Algorithm Hour, right? And this course is basically just building algorithms, right? So how is this different from our algorithmic trading course, you might ask? Well, algorithmic trading is going to teach you how to build algorithms from scratch. You'll learn how to build that whole thing, everything from learning Python to you know, how bots work, how to load data, all that kind of stuff we'll talk about in the algorithmic trading course. Whereas the live algo building hour, all we're going to be doing is building algorithms, right? If you have a coding background, then you'll be able to figure this out pretty easily. If you don't have a coding background, well, then you can still basically copy and paste the code. It's not something that you know, absolutely need to be able to modify in all cases, right? If you want to copy and paste, that's your prerogative, right? But if you want to really learn how to build and modify all these things, I'd suggest taking the two together, right? That's my little spiel. Okay, so moving on. Let me know if you have any questions around that, by the way. I'm just checking here. I'm checking the chat. Okay, so how does Live Algo Hour work, right? So this is what it's going to look like, right? We're going to do basically 6 steps every week, right? Or you'll be able to do 6 steps every week. This will be a weekly class at this time every week, right? So it is 8 p.m. Eastern time, or we started at 8 p.m. Eastern time, whatever that is in your time zone, right? But we'll basically be doing this every week on Tuesday at the same time. And what we're going to be doing is we're going to be building algorithms together, right? So this is kind of the way that you do it. You first of all submit your desired algorithm to our growing list of ideas. I have a bunch of ideas here that I'm going to take us through. A lot of people submitted different things, so we can go through all these and talk about them a little bit. Then after that, you're going to tune into the call like you are doing right now, right? This is basically going to be a weekly call. You don't have to attend every single one, but if you want to kind of get an influence on it, then I think that would be a very positive thing to do. All right, but even if you don't attend, you get access to all of our code and all that kind of stuff. Third of all, you're going to engage in discussions. Today is going to be a little less discussions than usual because we're not doing this through Zoom, right? We're going to be doing this, we are doing this on Circle, which does not allow you to share your screen, right? But when we're doing this on our regular cadence, like for example, next week, we will be doing this live over Zoom. You'll be able to turn on your camera, turn on your microphone, share your screen if you want to, and we can actually engage in discussions around what algorithm we want to build and, you know, what are the decisions around that, right? So we'll actually have quite a lively discussion, I believe. Number 4, you'll vote for the algorithm that you want to have created, right? Today, I'm just going to pick one, but in the future, we'll have the ability to vote and you tell me what we should be working on. Number 5, You'll basically witness the magic of live programming. You'll watch essentially me program this thing, and we'll go back and forth. I'll build a little bit, ask you some questions. Is this the way you want it? Is this the way you want it? What do you guys think? We'll be going back and forth, will be very engaging. And basically you'll see how to build one of these things from scratch. You'll be watching me do that. And then also you'll be able to get that code afterwards and use that code however you want, right? Which brings us to number 6, is you can download this code and start using it in your own strategy if you want to, right? This code comes without warranty, so use it as you want, right? Basically, if we build some algorithm, find something that makes some crazy amount of money, well, you'll have access to that code and you could run it yourself, right? If you want to see more about the course, here it is. I'm going to pop this link into the chat if you want to learn more. There you go. But essentially, I'll walk you through this here. This is our live algo hour, right? We talk a little bit about kind of what it is, right? How does it work, which I just walked you through. What are some benefits? Well, you're going to get 2 to 3 hours or 1 to 2 hours per week of live algorithm building. We'll be actually building this live in front of you like we are today. You're going to get exclusive access to our code library, right? So the code library is going to essentially allow you to use any of this code that we've built, not only today, but next week, the week after, you'll have access to all that code, whatever algorithms you think are the best. You can just use those, run those, modify them, or whatever you want to do. We're also going to record each of these sessions, so you'll be able to watch the sessions afterwards, right? So you don't have to be here at this particular time, but if you are during this time, then you will have the ability to actually influence what algorithms get built, which is pretty cool. And then you'll be part of a thriving community, right? Like for everyone that shows up, I hope we'll be able to get to know each other really well and really start to share ideas to build very good algorithms, right? So there you go. So that's all that stuff. Today's class is free, right? In the future, there's going to be $200 a month. You'll be able to join every Tuesday, and just as long as you're paying that $200 a month, you'll be able to join this, right? So it's every Tuesday, 8 p.m. Eastern. It's going to be live over Zoom, right? And it's going to be 1 to 2 hours, depending on the algorithm, right? If we have a more complex algorithm, we'll spend more time. If it's something simpler, it'll be faster, but it really depends, right? So that's the whole story behind Live Algo Hour. So let's get started, right? Let's actually do it. Okay, and I think I saw a question here too. A few questions. So Larry asks, we'll be able to see this video on another time to look back at it. Yes, you will get the recording of this. We'll be sending this out to everyone that attended and also everyone else, so people can see kind of what this looks like, right? Worth asks, how do you pronounce your last name? In Polish, you pronounce it Grzesik. In English, just call it Grezik. Good question. Thanks, Worth. Robert asks, do you all have a GitHub or another place repository? Yes, we're going to be putting this all into Google Drive. We're not going to be doing this in GitHub because I think it's a little easier to access it through Google Drive. It's automatically going to be syncing, all that kind of stuff. If we go through this class a few times and you guys think GitHub is still a better choice, then we could try that out too. But yes, you'll get access to the code is I think the main question there. And yes, you'll be able to get access to that either through Google Drive or whatever else works. I'm not really biased to any of this. We've been using Google Drive for a while and it's worked pretty well. So, okay, cool. Oh, we have quite a few people here. This is a packed class. Awesome. All right, so let's review some suggestions. So a lot of you guys gave suggestions for these algorithms, right? So let's talk about some of the suggestions that you guys had. All right, there's some really interesting ones here that I see. So what I asked you guys was basically, what algorithm would you like to see? Describe it a little bit more in detail. Have you tried trading this yet? What types of returns do you think you'd get, like as a percentage per year? Provide any other relevant links and anything else you'd like to share, right? I'm going to keep this here. You guys can take a look at it. In the future, if you guys choose to join this class, like I said, $200 a month. We're going to be doing this every Tuesday. If you choose to join that, then this is going to be a public thing that you guys can access, right? So you'll be able to go in there, add more stuff to it. Maybe we'll find some way to allow you to vote on it and all that kind of stuff too. I'm thinking Airtable is probably a good choice, but you guys let me know what technology you think makes sense. So here's a couple of them, right? I'm going to, there you go. Okay. So here's a couple algos, right? So the first one, I thought this one was pretty interesting too. It was an LSTM PPO model, day trading SPXLs daily. Cut off a little bit there. But basically, it sounds this is so for those of you who don't know, an SLTM is essentially a machine learning term, long short-term memory model. It is a form of artificial intelligence that basically can trade. You typically use this kind of stuff for looking at text because it has, kind of needs to maintain a memory of sorts. But it could also work quite well on data like pricing data, right? So this person's saying prediction-wise, mean square error and linear regression and forest have proved to be very capable strategy. Wise mean reversion tied to Fibonacci to be able to track precise movements, when to buy and sell, which are inverse from another, right? So you could buy and sell these two symbols that are inverse, and should be able to track also the S&P 500 and make money whether S&P is bear or bullish. I agree with that. I think that'd be really cool. Essentially building a machine learning model, which I'm actually working with someone on one. I spoke to him earlier today. We're going to be working on something similar to this. So that's actually great. Have you tried trading the strategy yet? Haven't been able to get the code to run optimally, but multiple parts perform very well separately. It's very cool. And what types of returns can you expect? 70% a year. That sounds fantastic. It is definitely one that I would love to build at some point in one of our discussion hours. That sounds like a really interesting strategy. Not even just because it's 70% a year. That sounds great. There's another one here, text email notifications of trade signals and I don't know why this is. And algo trade response, buy, sell before, after earnings period, like hedge funds do. All right, so interesting. So conduct a historical study of periods, rise and fall for several securities during their different earnings periods. Determine what is the most consistently high return accounting for a season, predicting highs and lows, post earnings, highs and lows, best performing securities of the lot, select the best result, industry, day prior to earnings, buy, sell, back test it against other securities. So it sounds like a very interesting one. Basically, we'd be trading off of earnings reports. I think that's awesome. I mean, a lot of people do that already in the stock market, and we'd essentially be automating that. So this to me sounds like a very interesting strategy. We're saying here what types of returns, 6%. I personally think could be a lot better than 6%. There's also, I've seen people do something like this before and have had very, very good results. So I think there's a pretty interesting strategy as well. So thank you for whoever submitted that. I have another one here, Bollinger Bands with RSI, right? A little broad, but I think we could work with it. I'm actually thinking this might be a good one for us just to do today because it's simple and we can get it done pretty quickly. And I don't have to ask many questions because some of these ones here that you guys posted would be good to have that interaction back and forth, right? If we were on Zoom, so I could ask you some questions because I do have a bunch of questions about both of those. All right, this seems like a fairly straightforward one. We've built a bunch like this already. Another person submitted covered calls. This, I think, would be a fantastic strategy. I've actually seen a lot of people make quite a bit of money on covered calls. It sounds very simple, right? And it is, but I've heard very, very good results from it, right? So for those of you that don't know what covered calls are, it's essentially if you buy some asset, right? Let's say, for example, SPY. At the same time, you sell call options on that symbol, right? So essentially, what that does is it caps your returns for that month, but protects you if there's a downturn, right? So you're basically earning like an extra dividend on top of what you're holding. I've heard people making very good returns off of this. It's one of those simple strategies that I think would work quite well. And I was actually hoping to demo this to you guys today, but I'm working on some new technology, so I don't think this week I'll be able to do it. But if you guys come back next week, we could probably knock that out pretty quickly and run a covered call strategy and see what kind of returns it gets. We can back test it, see what levels of covered calls, right? Like what strike price you want to buy it, how far out do you want to buy it. There's a bunch of different things that we could back test and check to see what would be the best way of doing covered calls. And then once that's working, we could just automate it and it'll just run on its own, right? So I think that'd be a fantastic strategy to run. I'd be down to do that next week if you guys are up for it. This one here, no one submitted anything. Someone just said with a Sharpe ratio over 1.5. That's great. I mean, that's what we're trying to accomplish. There's another one here, Fibonacci trading bot that buys when the price reaches 50% each time, screening multiple stocks at a time, incorporating leveraging, using factors to predict the market, checking news, trading multiple times a day, calculating risk-free rate, and including night trading, buying on close, selling on open. So it sounds like a bunch of different things here. It sounds like, yeah, it's based on a book is what it seems like, a Python guide to the Fibonacci sequence. We could potentially build something like this. I've heard of some pretty good things around Fibonacci, but this sounds like there's a bunch of things mixed together. So I'd actually love to ask you a few questions around that. There's another one here, breakout micro trend momentum. There's a buy strategy that uses SPY and SQQQ to cover both long and short markets. There are two simple moving averages. One is a 10 period based on the close, and the other is a 21 based on the close. First, the 10 must be above the 21. Then when price goes above the previous high pivot point, you buy. Once the 10 period moving average slopes down, you take profits. So sounds like this is another one that we could actually build today. This sounds pretty clear to me. If you guys are interested, let me know. We could build this one today. We could try either doing the Bollinger Band one, or we could build the breakout one. This sounds like a pretty straightforward thing to do. Another one is I would like an algorithm that could help with business creation and development. I'm not sure if I'm understanding that correctly, but that interact with Google Sheets. That doesn't sound like a trading algorithm to me. That just sounds like a software tool. So I'm not sure what that is. There's another one here, one utilizing the strat by Rob Smith. Actually, we should look this up a little bit. I think a discussion would be good around this. But use full-time FRE continuity, broadening formations and entry and exit points based on previous candles. This sounds interesting. I'd love to actually learn more. I feel like it'd be good to have a discussion around this so that we can figure out exactly what you want with that one. It's another one here, either pairs or scalping, right? There's a lot of different strategies we could build like that, so we can have a discussion around that too. Order flow algorithms show who's control. I actually did a little bit of research on this. I think you and I, the person who put this up, we had a conversation back and forth a little bit through email. This sounds like another interesting one to build. And then build a strategy that trades live. That's a given for any of them. So we have a bunch of interesting strategies here, right? A bunch of them that I think are really, really cool. And I'd love to ask some questions around this, right? So I think if you guys join our live algo hour, it'd be great if you guys could actually like share screens and show me on a graph what exactly you're looking for. And then we can do this back and forth and build it during one of our future classes. But I think for today, we should just do something simple because I don't want to keep you guys here for too long. We already have a bunch of other things that we're talking about. In future classes, I think we'll have much more time to spend on this. So we'll be able to get some more complex ones and ask some questions around it. So I think we could choose either the Bollinger Band using RSI, which sounds to me like it would be some sort of a mean reversion strategy, right? We've built a few like this before. We could definitely run something like that on, a crypto coin or something like that. So we could actually watch this thing run. Another one is a breakout micro trend momentum strategy, right? And this is the one that says buy strategy that Utilize SPY and SQQQ to cover both long and short markets. There are two simple moving averages. One is a 10 based on the close, and the 21 based on the close. First 10 must be above 21. Then when price goes above the previous high pivot point, you buy. Once the 10 period moving average slopes downward, you take profit. Right? So we could build one of these two. We could build either a Bollinger Band, a mean reversion type strategy, or we could build a breakout momentum strategy. So how about you guys tell me in the chat and let me know what you'd prefer to do. So we have some questions here. So Jarrell says, awesome. Jeff Larson says, is this included with the class? If you mean the algo trading class, this is separate, right? This is an add-on to that, right? So if you want to join the live algo hour, it's $200 a month. It's a completely separate class from the algo trading class. Worth says the idea with Bollinger Band strat is to short a decaying leveraged product at the top BB and cover at the lower Bollinger Band. Okay, so short a decaying leveraged product. I just added the RSI to know how to add a qualifier. Okay. All right. Okay, that's good to know, Worth. So maybe you could tell me a little bit more about that as well. Emmanuel says, I like the BB or the EMA cross or a combo of them both. Emmanuel, you got to pick one or the other. So let me know which one you prefer, the Bollinger Band one or the EMA cross. Jeff says the breakout. James says mean reversion. Chris says Bollinger Band. Andrew says mean reversion. It sounds like we're pretty, we're split down the middle right now. Eric says, I don't know about SQQQ, so the other one. All right, so sounds like you guys are pretty split, but sounds like we're gravitating towards the Bollinger Band one, right? Because we have this, right? EMA cross. So for, okay. So for 200 a month, we just give you the bot we want you to make and we walk through it with us, or do we get the libraries to build it ourselves? I missed that part, my apologies. Yeah, so Eric, so $200 a month is going to be joining in on sessions like this where we discuss what algorithms to build, and I'll be building it live, right? So if you have an algorithm in mind, we can do that, right? We could build your algorithm, right? But you could also watch other people's algorithms being built as well, right? Because there's a lot of value in that. Right? Because you might have something in mind that you think is going to do very well. We could run that, we can build that, right? But then maybe you'll discover something much better, right? Or maybe we could have a discussion around it and find ways to tweak it, right? So there's a lot that we can actually do there. So Robert says BB. So I think Bollinger Bands have the win right now by a small margin. Hernan asks, do you do on the E-mini S&P 500? We can trade on futures, yeah, if you wanted to, right? We've built a couple of futures trading algorithms, so if you want, we can do that. We just need to get the data for the futures, which I don't have on me right now. Eric says, okay, great. I have something in mind for gold and Forex. Very cool. Awesome. Cool. We could definitely build these kind of strategies that you're thinking about, Eric, for sure. That's the whole point of this, right? Basically, we'll sit there, we'll have a discussion around this, and we'll actually build a strategy, right? So, Worth, you mentioned here the Bollinger Band strategy is to short a decaying leveraged product at the top Bollinger Band and cover at the lower Bollinger Band. I just added the RSI to know how to add a qualifier. So Tim asks, will the bots work on any asset? It depends on the bot, right? Like if we build one for options, it's kind of hard to switch between the other ones. But if you build for stocks or for crypto, they're pretty easy to switch between the two. Although some strategies work easier on one asset than another, right? Like Forex trading strategies are quite different from stock trading strategies, right? Stock and crypto can be pretty similar, except when you're thinking about financials and all that. So it depends. So some of them you can use between assets, some of them not. So that's it depends. That's kind of what it's there. So let's work on this Bollinger Band strategy. All right. Worth, you're saying to run this on decaying leverage product at the top. So shorting a decaying leverage product, the only problem with that, UVXY, let's see. I'll look up what you're talking about here, UVXY. The only problem with when we short things like this is that knowing if you're going to get a margin call is something that you know we'd have to consider here with this, because this is this is UVXY. This looks like one of those things that basically just goes straight down. Yeah, I know exactly what you mean. Right, so the VIX, right, it's just basically just losing money constantly, right? So you want to short this, right? And then you want to do Bollinger Band strategy around this, right? So that makes sense to me. Like I said, the only thing with shorting something like this, I don't know if you've tried doing a strategy like this personally, but shorting something like this, I would need to know what your broker allows you to short, right? Because usually it's only like 30% of your cash, right? Which causes a bit of an issue there, right? What do you do with the rest of your cash, right? Maybe put the rest of our cash into the S&P or something like that, and then short with the remainder of the cash or something. I personally am wondering if we can do this on a different asset, right? Something that is already inverted. I think that'd be a lot easier than to do that. Hernan asks, why does the screen look mirrored? That's because I'm looking at the screen, right? So it's a screen with that's basically what it is. I'm sharing my screen, and it's doing that. But okay, so Worth, if you know, is there an inverse of UVXY? UVXY inverse. I'll look for that. So it'd be a lot easier to trade it long, right? That way we don't have to worry about margin calls, right? Because that becomes a bit of a pain when we have to deal with that, right? So I want to see if there's one that already is the short of that. So there's SVXY. So maybe SVXY is one that would work. SVXY. See what this graph looks like. Should be pretty much exact opposite. Okay. So this looks like basically the opposite of what we were running there, right? So we could do this, right? If you're interested. So Worth, you gotta let me know what you think, right? It'd be a lot easier if we could just share the screens, but if that doesn't work, then we could pick a different asset as well to do this on, and we could play around with it later on, right? How about we start this off? I'll start off with doing SVXY, right? Because I think it's the short, yeah, short VIX short-term futures, right? So it is basically the short of what you're talking about. I don't know if it's going to give the same return profile, right? I know this one had like this big issue that happened here too, right? They like redid it around this time period, and there's this huge issue that people had here. But we can maybe back test it up until that point, or just right after that point, because I know that was a very strange market movement that happened there. So let me know what you think. Let me know what you think, Worth. Yeah, good idea, SVXY. Okay, cool, perfect. All right, okay, so let's get started. So I was thinking about this strategy. So you guys actually ended up picking the one that I thought. So I already took the liberty, got a little bit started with it. Not really much of anything, just loading data, right? This is usually when we build algorithms, I'll just copy paste all this stuff, right? So we have this code already. We have data here being loaded for Bitcoin. So we're not going to be trading Bitcoin, so we can get rid of that, right? Okay, I'll get rid of that for now. Okay, we're instead going to be trading SVXY. So I'm going to load data from Yahoo, right? We're going to be dealing with daily data from Yahoo. So we'll use that, and we'll benchmark it against the SPY, right? Because we want to see if we beat the stock market. How are we doing versus stock market, right? Here I had it set up so we could trade with Kraken. We could change that later on as well if you want to trade with some other broker, because Kraken is a crypto broker, so we won't be able to trade SPXY there, right? I'll set our strategy to trade daily, right? This is going to be 1 day at a time trading. If I want to trade this on a higher fidelity than a day, I'd have to download the data, right? Which I don't want to make you guys wait for. But we're actually working on something that, yeah, that's a good idea, Long. We're actually working on, and I was hoping to show you guys that this week, and maybe I could even, is brand new thing that makes it really, really, really easy for us to get data. So I'd actually love to demo that for you guys at some point. But for now, we'll just stick to daily data, and we'll go that way. All right. Okay, so we'll say the symbol is SVXY. Okay, and what we want to do, maybe Worth, you could explain to me a little bit more what you mean by this, right? But while you're explaining, what I'll do is I'll start getting the data that we need, right? And getting this algorithm set up. And maybe you could explain to me a little bit more what you mean, how it will actually be trading these Bollinger Bands and RSI. Like what exactly is it doing, right? We sell when we reach the top Bollinger Band, buy when we reach the bottom. I'm assuming that probably makes sense, right? But let me know if you have something different in mind. I'm also going to set the back testing dates here, right? What dates we're going to back test from. So I'm going to just take a look at this. We can do this part, right? So it started trading November 1st, 2011, and we'll do it before this giant drop happened. Because I know this was like a one-time thing. I actually read about this in a newspaper. I don't know if you guys read about this, but there was like some issue with the futures, and a lot of people lost a crazy amount of money on this day. But this is not something that I think we would expect in the future trading this asset. This was like an issue with the ETF company, right? So we're going to ignore this part here because this is something that I don't think will happen twice in a row, right? Just because they had to like restructure a bunch of stuff and whatever. I think they got sued a bunch because of it too. But okay, so we'll run it from November 1st, 2011. Actually, we'll go from December, so we have a little bit of historical data. December 2011 to December 2017. So I'll go December 1st, 11, and then we said 2017. We'll go December 1st, 2017. Okay, so we'll back test all those years, right? So that's going to be what, 6 years of data. Okay, so we'll back test a bunch. And let me check up again on, yeah. So Worth, if you want to tell me a little bit more details about this, that'd be great. But okay, cool. So we set our back testing dates, right? Now we set that up. Now what we're going to do is I'm going to get the asset here. So we're going to pull the symbol SVXY. That's part of our parameters. You guys will be able to change this later on. If you get access to this code, you'll be able to modify it and run it however you want. So here, usually at the top, I'll put parameters, and this makes it easy to switch, right? So it would say RSI length, and we'll go Bollinger Band, actually RSI upper. That's kind of the typical thing, RSI lower. And by the way, this is, if you guys are looking at my screen here and you're seeing this is not necessary. You're seeing that this is kind of popping in here. It's because I have an AI that's helping me write this code called GitHub Copilot. If you take one of our classes, like our algo trading class, we'll actually teach you how to use the AI as well. So you can build quite a bit faster because of it. Right. Okay. So we're gonna make the asset a stock, right? This is the symbol, is SVXY. All this stuff you can modify. These are all parameters that we'll be able to change, right? Then I'm gonna get historical prices for this, right? So I get historical prices, right? And again, we cover all this stuff in our in our algo trading class if you're interested in what exactly is happening here. Right, so but basically I want to say I want to get this asset, which is going to be SBXY. I want to do this for whatever's longer here, right? Either RSI length. So I'll actually pull these out. So RSI length, RSI upper, RSI lower, right? Bollinger length. All right, there we go. Okay, we're gonna get the length that we want to get. It's going to be the greatest of RSI length or Bollinger length, right? So we're going to get that. And then last but not least, we want to say that this is day. We want day data, okay? Then I'm going to pull out the data frame, which is if you guys ever coded using pandas, it's how we get our data so we can actually process these prices. All right, okay, so now we have kind of all of our parameters set up. We have our historical data. Now we need to put in our logic, right? And if you go through our classes, we'll talk about there's steps to building a bot, especially ones like this where you pay attention to some sort of technical analysis indicator. Usually we want to get all of our data first. Then we want to get our indicators, right? And then we want to do our logic. So actually next I'll do our indicators. Okay, and Worth is saying, I thought I could simply buy the bottom Bollinger Band and sell at the top for the long SPXS strat, and then maybe run different bots in different time frames to diversify. Okay, interesting. We could definitely test a few different time frames. This will be very easy for us to try out. What if it's a different Bollinger Band length and all that kind of thing. Hernan says, after this, can you do Forex, Euro USD, and E-mini S&P 500 futures for day trading intervals of 5 minutes? We're going to stick to one strategy per day, right? So Hernan, if you want to see something like this built, submit it into, it's basically on the page, right, that you signed up for this. You could submit your own strategy and put that in there, and we can cover this in future classes. All right, Jay says, can you also plot the indicators as charts, both Bollinger Bands and RSI with entry and exit signals? That's not something that we have yet, but it is something that we can add in. I've actually thought about that, being able to plot these indicators. I think that'd be a really cool thing to do. And I believe we'll be able to do that in the future as well. But that's not something we'll be able to do today. Brian Crosby says, is there a replay to this in case I'd like to refer back to this info? Yes, Brian, this will be replayed. We're recording this right now. You can actually see the recording thing here on my screen, and we'll be releasing the recorded version of this in the future. All right, okay, cool. So let's get back to the strategy. So sounds like a pretty straightforward one. So we have all of our parameters, we have our data, right? Now, next thing we want to do is we want to get our indicators. So I'm going to use this pandas TA library, and I'm going to use the magic of AI, calculate the RSI. Right, there we go. Here's our RSI. And we'll go RSI. Right, there we go. That's our current RSI. Right, and then we'll calculate the Bollinger Bands. Right. Okay. So length. So that's our Bollinger Bands. And we'll go BB upper, BB lower. And notice that I'm not even writing a lot of this code. AI is doing a lot of this stuff for me, so it's really cool. Okay, so now we're going to have our RSI and our Bollinger Bands, right? So you're saying that you want to have a strategy that basically, sorry, just give me 1 second. This cat wants to get outside. Sorry, cat was scratching at the door. Okay, so we have here our Bollinger Bands. So you said that you want to buy when we're at the lower, right? And then we want to sell when we're at the upper, right? So that's kind of the typical thing that we would do here with most strategies like that. So buy if the, and we'll get the current price as well. We'll go like this, current price. It is a current price of SVXY, right? Okay, so buy if the current price is below the lower Bollinger Band, right? And we're going to ignore RSI for now. We could add that in later if we want to. Okay. So if current price is less than our lower Bollinger Band, right? That's an if statement there. And then what we want to do whenever we do something like this is I want to, first of all, check, do we already own it yet? So we don't want to buy it twice. So first I want to check, check if we already own this asset, right? So we can do that by going, if not, self dot get position, right? Okay, so if we don't currently own it, then we want to buy, right? So we're going to go, but specifically what we'll do is we'll buy everything in our entire account, right? So I'll go cash is equal to self.get cash, and then we'll go quantity that we're going to buy is going to be cash divided by the current price, double divide because we want to not have any decimal places. So by that quantity, so we're basically going to take all the cash we have and just buy this asset with it. I'm going to create the order. It's going to go like this: self.create order, right? Asset quantity buy, right? There we go. And then we're going to submit that order. Submit order, perfect. Okay, so that's our condition if Bollinger Band is, if we're below the lower Bollinger Band. Now, the next one is going to be sell if the current price is above the upper Bollinger Band. So I'm going to do that. So if current price, okay, we check if we own it. If we do own it, then we want to sell it, right? We want to sell everything that we own. There you go. So notice that AI basically did most of that for me, which is fantastic, okay? I'm going to do this slightly different because I think we'd be a little bit more efficient here. So if we already own the asset, if position is not none, then we get our quantity and we're just going to sell everything we own. Okay. So I think that's pretty much it for our strategy. This is a fairly simple one to build, right? So let's take a look at it and we'll run this and we'll see how this actually works, right? Okay, and this will also be a good sanity check just to make sure that all this code is actually working and doing something. Okay, in the meantime, I'm going to check up on your comments here. Is there a replay? Hernan says, Vijay, I think I know how to do that. The plotting, email me or WhatsApp me. Awesome, cool. People already socializing through this. This is exactly what we want, right? We're going to build a community around this. Hopefully come up with some very, very good strategies in this community. Got me very excited. I've been thinking about this a lot, by the way. Cool. Okay, so we have our strategy going. We're running this. The way that these algorithms work, by the way, is it kind of like simulates each day at a time, right? So here we're running one day. This is probably the first day, which is 2001. I thought I put 2011. So probably have an issue, right? I think 2011 was when this thing started trading, right? I have to fix that. Yeah, 2011. So, okay, so I'm going to rerun that. Okay, we save that, rerun. Okay. So basically the way that this works is on trading iteration is going to run once a day, right? And it's going to go through our logic. So it's going to say, okay, it's November 1st, 2011, right? Or December 1st, 2011. What do you want me to do today, right? Well, what we want to do is we want to get basically all of our parameters. Let's get to know what each one of those are, download those, then get our historical data. And here's the historical data from that point of view. Right here, it got historical prices. This is what it looks like. This is the data that we're dealing with, right? So as you can see, we're standing on December 1st, right? And we're looking back 20 days, right? So here's the past 20 days of data if we were on December 1st, right? And this is the data that we're going to use to determine our Bollinger Bands and all of that, right? So here we do that. Okay, we're going to get our RSI, right? Too many values to unpack. Well, this is actually needs to be modified a little bit. I actually know how to do this. Yeah, we have a little bug here. Okay, so I'm going to stop this. I'm going to fix this, right? So we're going to go B bands. And then it's going to go like this, BB. Sometimes the AI gets a little wrong, right? But here we have, we should be able to do it. We'll put in here the links in case you guys want to modify this. I'm making this in such a way that it'll be easy for you guys to modify how the strategy works. We'll put that there, put this there. Okay, we'll rerun this one more time. Okay, so we're slowly getting the strategy into place, right? So everything is working up until this point. Now we just have to get our Bollinger Bands to work. Okay, so upper Bollinger Band at this point in time, $24.82. The lower Bollinger Band is $18.60. Quite a big range. So if we're looking here, this would be back here. Yeah, so it's around $22 a share at that point. I'm going to even make this bigger on Yahoo so we can kind of look at the details. This is 2022. Let's zoom out a bit more. Okay, so around here, this is where we're trading. It's December 1st. So Bollinger Band is pretty wide around this here, right? So again, it's our Bollinger Band upper is 24, our lower is 18. If you look on this chart here, yeah, 18 would make sense. Upper 24, that would make sense. So that's where we're around. Okay. So now that's on December 1st. That's our verdict there. And now we want to check, do we fit any of these criteria, right? So our current price. Oh, there's another thing I need to fix. Get, so again, AI is good, but not perfect. Last price. Rerun this one more time. And then now all we have to do is check, is our current price below our lower or above our upper? Right, so here we have current price $22.30. Upper Bollinger Band is $24.80, and lower is $18.60. So we're right smack in the middle of those Bollinger Bands, so we wouldn't do anything on this day. So the next day comes around. This is now going to be December 2nd, right? We have a current price of $22.77. Upper Bollinger Band $24.85, lower $18.59. That wouldn't activate it either. If we go to the next day, right, it's $24.70. Current price, we're getting pretty close to upper Bollinger Band, right? $23.95, 24. And you know what? I'll actually just let this thing run until it actually satisfies one of these criteria. Okay, so here, the current price is above the upper Bollinger Band, right? So we're in a scenario where we would normally sell. However, I do not believe we have a position. Yes, we don't own it right now, so we're not going to sell, right? Because we are at the upper Bollinger Band, but we don't own anything, so we're not going to go into a short selling position, so we ignore it, right? So there's a bunch of sell signals here, right? If we had owned something, this would have been telling us to sell, right? But I'll let this thing run. Okay, now we're in a position where it says to buy, right? So now what we'll do is we'll make a purchase. The amount of cash we have is $100,000. The price is $34.36. So in that case, when you divide those two, it means that we should buy a quantity of 29,200 or 2,910 shares of this. So we'll do that. We'll place that order, and there we go. Okay. And then now we're going to be selling it. So we bought it like 35 bucks. We're going to sell it at 43. That would have been a very nice profit. That would have worked very, very well. Okay. So now we're going to keep running this. We would have made like 10% of our money there. Okay, here's another one. We're buying at $66.56. Let it keep running. And now we're selling that at $94. That's a huge profit. This is looking like a very good algorithm so far. Worth, I think you're onto something here. Then we're buying at 75 bucks. And then we're selling at 98. Wow, these are big trades. These are very good. Then buying at 79. And then we're selling at 90. These are all very, very good trades. I like this strategy so far, Worth. Okay. So what I'm going to do is I'm going to take off all these breakpoints. I'm going to run it and we'll see the results. Right? I think this is going to turn out to be a very good one. I think this is a really cool strategy to try out. And what we could do is even try it with different date ranges and all that and just kind of sanity check this a little bit. But this is looking like a very interesting strategy, Worth. I like it. Okay, so we hit 100%. There we go. Let's check out the results. So whenever you run a back test using LumiBot, you'll get something like this. Here's our trades. These are all the trades that got placed, right? A little volatile, to say the least. Definitely moving around quite a bit, but you can see that we're profitable most of the time. The blue line is our strategy. The red line is the S&P 500. And then, sorry, let me go back to that. So you can see the blue line is our strategy. Red line is S&P 500. The green line is how much cash we have. So notice that there are times where we have cash, like $200,000. There's times where we have no cash, basically because we invested all of it, right? So this is all the different trades, right? We placed a trade on May 21st at a price of 36 bucks. And then we sold that at $44 a few days later. So you can see a bunch of these buys and sells, right? Here's the breakdown of the entire strategy. We made 245% over this time period, right? So which I think was at 6 years, right? The S&P only made 140% over that same time period, which in other words means we're making 22 or 23% a year. That's pretty damn good. It's a very nice return. Other than this one area here, I think it was doing very, very well. And then 15% is what the S&P did. So we beat the S&P 500 by quite a large margin when it comes to returns, right? So almost 23% versus like 15.5, right? Our Sharpe ratio is 0.6, right? I think that has a lot to do with the volatility. You can tell on the graph, it really moves up and down a lot. Our max drawdown is quite substantial. This is definitely a risky strategy, that's for sure. 75% loss would have been our biggest loss. You can see here, really fell quite a bit around this point. I think we could probably tweak this algorithm to not have gone through this really bad period here, right? So I think we could probably tweak it more and actually do a lot better. We're already doing 23% a year. That's pretty damn good in my books. But I'd like to figure out a way to actually reduce the risk on this. I think there's a bunch of ways we could do that. Our max drawdown was 75% versus S&P, which was 13. And our volatility was almost 50% versus S&P, which is 11. So we're beating the S&P by a pretty large margin in terms of returns, but our risks are also pretty high, right? So risky strategy, but something I could potentially make a lot of money. I think this is a very interesting one. I think we can tweak this to make it even better. All right, so let me see what you guys have said around here. Okay, so I'm going to read. Yeah, Sharpe ratio needs work. I agree with you, Guy. Okay, so Vijay says Can we also have trailing stop and profit targets automatically too? Yes, you could definitely add trailing stops and profit targets. We can absolutely do that. I can show you how to do that. We enter in limit orders and all that. Hernan says, hey, Rob, can we see a model that learn and splits data in a time series fashion and anticipating market trend? I'm not sure what you mean by that, Hernan. I think you have to expand on that a bit. Yeah, so Guy says, would have been hard to stick with that at the beginning of 2015. I agree. That definitely very risky. I think we can find some ways to reduce that. Hernan asks, what is a good Sharpe ratio? A good Sharpe ratio, it really depends on the time period, right? Usually we'll say a Sharpe ratio over 1 is good. Sharpe ratio over 2 is excellent. Sharpe ratio over 3, call me immediately kind of thing. But it depends on the time period, right? There are time periods where the whole market's just down, and having just a non-zero, like anything above 0 is a good thing, so it depends on, it's all relative, right? We want to have a better Sharpe ratio than the S&P around the same time period. I would say that's a better way of looking at it rather than an absolute number, right? Because it depends on the time period you're looking at. If you're looking in 2008, everything had a negative Sharpe ratio, right? So that's something that's important to pay attention to. It's all relative, right? You always want to look at a benchmark. Okay. Guy Porter says a Sharpe ratio needs work. I completely agree with that. Dave says the times it made money were when the S&P was steadily rising, very dangerous. Yeah. So yeah, definitely something that has a bit of danger in it. So Worth says, great long wait between trades. Different time frames would be interesting, like 1 hour chart. Yeah, unfortunately, I don't have the 1 hour data on me right now, right? I would need to get that, and I don't want to make you guys wait for it. But I'm working on something brand new that'll be very, very easy to do that. So if you guys pay attention next week, we'll actually be able to switch between time frames really, really easily like that. I could give it a shot, but last I checked, it was causing some issues. I'm just trying to think here if I can. Yeah, I don't think I'll be able to do that like right at this very second. But if you stick around for next week, we could do that next week, right? I could flip this to 1 hour and make that very, very easy, right? Because we're adding, like I said, this new feature, and that'll make that really simple to switch. We don't have to download the actual pricing data. Cool. Okay. So what are some suggestions you guys think? What do you think we should change about this, right? So we have our algorithm. We're doing this. I think there's a couple things that we could do to improve this, right? I think first of all, we can play around with the different lengths, right? Right now we have a Bollinger Band length of 20, right? We could try different lengths of Bollinger Bands, shorter or longer, could be interesting, right? I'll just make the change to 10, run it, and see what happens. Right, we'll see if that improves it or not. We could run it with 10, we could run it with 15 and see both of those results, right? Or 25 as well. But some other things we could do too is we could like incorporate in RSI, so we could have like confirmations, right? So if we're below our lower Bollinger Band and we have an RSI confirming it, then we can make that a trade that happens, right? But generally, if we look at, okay, where did it make a mistake? Well, it made a mistake around here. It bought SPXI around here. I think this is when the market started doing pretty bad. It was 2015. I think there's a recession. You can see the S&P was actually falling around that same time period, right? So that's when it fell. So it seems almost as though it didn't exit fast enough, right? Because it held that for quite a long time. I would have expected it to get out quicker, right? So let's see here. This looks a little bit more interesting to me, right? This is with a shorter time period. This is with Bollinger Bands of a length of 10, right? This looks like it made a few better choices. Yeah, look at that. We're seeing a 31% annualized rate. Our Sharpe ratio is better, right? So it seems like shorter Bollinger Band lengths is actually a good thing here, right? Whereas before we had a Sharpe ratio of 0.6, we now have a Sharpe ratio of 0.7. Before we had a return of 23%, now we have a return of 31%, right? So it is quite a bit better. right? The biggest loss that we had was a 75% loss. Before, our biggest loss was 74%. So it's still about the same in terms of the biggest loss, right? But this seems like a better thing to do. Let's try maybe Bollinger Band length of like 8, right? So this thing will respond faster to all these things. All right, we could try 8, we could try 6, we could try 7, right? And see what works out better. I'm going to read your comments in the meantime. Okay, Hernan says add a shorting strategy. So Hernan, we could do another strategy next time, right? Right now we're focusing on just this one. If you want to join us next week, we could build a different strategy as well. Dave says use 100 period band. You want to try 100 period? Okay, we could try that. I don't think they'll trade as often, right? But we could definitely try that out. If we're going to try that out, we're also going to have to move the time period as well, because 100 days, we're going to need to start a bit later, because this thing didn't exist until November 1st. So we're going to have to 100 days. That's like what, 4 or 5 months in terms of trading days. So we'd have to start a bit later. Let's see what the result of this is. This is a shorter Bollinger Band. Right, there's a Bollinger Band, I think, of 6 or 7 length. Or what was it exactly? It's a length of 8. We'll see the tear sheet for it. Okay, so this is what it looks like. Or yeah, so it seems like we're doing worse when we lowered the length of the Bollinger Band. Although our max drawdown got better, but our sharp went down and our returns went down. So that doesn't seem like the right move to me. Let's try out the 100-day, like what you were saying there. So we'll move this starting period to something like May 1st, 2012. So we have those extra days for the 100-day Bollinger Band length. We'll go 100 days and see how that works. I have a feeling though that this is probably not going to trade too often. This is just going to sit in the market for quite some time, because from what I can tell here, it looks like the days that it stuck around for too long, those are the times when we got burnt, right? And maybe what we could do is we could have an extra sell condition. Maybe this is what we could do. We could make a sell condition that could be either we're at the bottom of the Bollinger Band, or or we could do like a stop loss or something like that, because it looks like that's one of the issues that was happening here, right? It seems that right now we have it only set up to sell if we pass the top, right, of our Bollinger Band. Yeah, but that doesn't count when we start to go into free fall, right? So it might be a good idea for us to actually get out when we start going into this free fall type thing, if we're losing a bunch of money. Yeah, this is 100 days. This looks like a very strange chart. It's not trading enough, right? So we tried that out. It's 100 days, right? So I'm going to set it back to 10, because that's what was working before. That was our best one to date, right? And then you guys let me know what other things you want to try, right? For me, it's looking like we want to check if we're in some sort of free fall situation. We want to exit, because this is quite a volatile asset, right? So I would think that if we are in some sort of free fall, right, and we could take a look at the VIX chart here. This is what, 2015. This is when this happened, right? We had this pretty big drop, right? Maybe we want to get out if it's like very quickly accelerating in the wrong direction, right? That's kind of what I'm thinking would work here, right? Sometimes it's a good buying opportunity. Sometimes it's this death thing that happens here. Like this is, over the course of a pretty short time period, it's like 2-3 weeks, it just dropped very dramatically, right? So if we were to put in Let me see if I could add in an indicator here. We can add in our RSI. We can add in moving average, right? There's our moving average, right? Maybe we want to do a moving average that's like a bit faster and just check if it's fallen very quickly. The 10-day moving average. Yeah, there we go. And if it's been like this big drop, right, then maybe we want to exit. Even something faster than that. The 5-day moving average. Right, so we want to be able to catch it before it causes a ton of damage. Right, so let me take a look here. What we'll do is we'll get those moving averages, right? So moving average length, right? We'll do a 5, right? We'll call it even EMA, right? I think it'll be even better, right? It'll catch things faster. We'll calculate, actually we'll go EMA length. We'll calculate EMA. There you go. And maybe we'll say something like sell if the EMA has fallen let's take a look at what this looks like again. Right, as if it's fallen below the current price. We don't want to be doing that because that's actually a good thing, right? Right, let me know if you guys have some ideas here. Right, because it'd be interesting to see what you guys have. Set to 5-period band for a day chart. Use 4, 8, 12 volume weighted moving average crossover for the exit position once in a profitable trade. Once all three have crossed the downside, exit the trade. That sounds interesting. Volume weighted moving average. So why are we using the 5-period Bollinger Band in this case? Right, because you're saying like get out of a specified number of adjacent candles close in the wrong place. I'm not sure what you mean by that, Worth. But David, I feel like this is an interesting thing. You know, use the VWAP, right? For exiting position and profitable trade. Once all three have crossed the downside, exit the trade. Okay, so this is so we'll get, okay, I see what you mean. So we can set this to 5. The Bollinger length is 5, right? Actually, let's stay with 10 for now, just because we knew that worked on its own, right? So we'll keep it that way. But then I'll get your retain advantage of volatility and exiting early. So use a 4, 8, 12 volume weighted moving average crossover. So I don't know what that looks like, a 4, 8, 12 moving average crossover. If you could explain that a bit better to me. So I could get the VWAP, I can get the 4, 8, and the 12 VWAP, right? But then how are they crossing? Once all three have crossed the downside, is it crossing the price? Is that what we're looking for? So let me actually see if we can put it up on here. VWAP. And I'm gonna put these all here. I don't know why it's not showing me the VWAP on here. Yeah, for some reason it's not showing me. VWAP will make this a blue, maybe. I'm not seeing it on the chart. But we can code it though, even if I can't see it in Yahoo for some reason, right? So we'll go calculate, like you said, 4, 8, and 12 VWAP. We'll go VWAP 4, 8, 12, right? And I just want to see what these look like. So I'm going to run this strategy and just check them out. I don't use VWAP too often whenever I trade. So it's something that I'm a bit new to. So I just want to see what the numbers look like. Okay, so they cross each other. So 4 crosses 8, which crosses 12 downward. Okay, so 4 has to be below 8, has to be below 12. Is that how it works? Let me know if that's what you mean. If 4 has to be below 12, which has to be, or 4 has to be below 8, which has to be below 12, right? Here we have VWAP 4, it's 20. These all look identical. I'm not getting any different prices between these. So I want to see if that's even calculating it properly. I'll go pandas TA. You look at our library and see if it's calculating this properly. It seems like it's doing something a little funny here. Indicators. Just going to search for VWAP. They have a better thing here. I'm trying to find. Actually, I don't think they have this. Quick start, issues, contributions. So I was trying to look through how to get this because it's clearly not getting the VWAP properly. Right, TA VWAP length 4. Yeah, because I think these should be coming out as different numbers. Like I said, I haven't really worked with VWAP very much, so I'm not the greatest with VWAP specifically, right? Yeah, once in a profitable trade, use as an exit strategy. Yeah. So I'm just trying to figure out how I can get this VWAP to work. You know what I'll do? This is what I'm going to do. AI is fantastic for this kind of stuff. And we actually teach, if you guys take our algo trading class, we teach a lot of this stuff in there. GPT-4. Use the pandas TA library to get the 4, 8, and 12 VWAP from ADF. Let's see what they come up with. Okay, so it actually didn't support back then. So it's going to make us an algorithm here. So high, low, close, divided by 3, traded value, and cumulative traded value. Okay, so it's doing all these calculations for us. VWAP equals, okay, right, and then window period. Okay, there we go. Okay, so ChatGPT helped us out here. So I'm going to copy this over. I want to use this. There's my VWAP. calculation, right? And I'm going to pass it. I think when we look at our data frames, it's capital C. I was going to check. Nope, we're all lowercase, right? Lowercase, open, high, low, close. Okay, so open, high, low, close, volume. Okay, so now we're going to do this. I'm going to actually tell GPT the function. This is how it says to do it. Okay, we'll just follow this. Oh, and I'll go VWAP 4. Go VWAP 8 and VWAP 12. There we go. That should work. Rerun this. I'm going to make sure that we have that data. All right. We'll see if this thing actually gets us the VWAP, and then we can do the cross. We'll see how that thing works. And VWAP 4. Still getting me all the same prices, which is a bit odd. Tell me if this would make any sense. Like, why would VWAP for 4, 8, and 12 all be identical? Right? Because it seems like both of those are taking us in that direction. Is there something else they'd want to? Maybe instead of VWAP, we could use just the moving averages. We could use the EMA's crossing instead. I do something very similar. Just instead of using, just use a weighted average or EMA, which would not be as accurate. Yeah. Can we reverse engineer, like, find the longest days in positive returns and identify the better indicator values and find better indicator values? Yeah, Vijay, we can do some stuff like that. I think machine learning is probably your best bet to find something like that. All right, Hernan says VWAP is correct. Yeah, Dave says just use EMA. Yeah, so we'll just use EMA, right? I'll use your 4, 8, and 12, but in EMAs instead, right? And we'll see if all those cross. Okay. So I'm going to remove all this VWAP stuff. I don't know what's wrong with it. But I don't want to make you guys watch while we try to figure that out. So instead, we'll have EMA. We'll go EMA slow, and we'll go EMA medium, and EMA medium. Okay. So fast, slow, fast, medium. So 12, 8, and you said what was the last one? Was 12, 4, 8, 12. Right, so 4, 8, 12. There we go. Okay, and we'll calculate all these EMAs, right? We'll go EMA slow. We'll call it EMA slow length. Be better to name it that way, because then we'll get things confused a bit later on. EMA slow length, EMA fast length, etc. Right? EMA slow length, EMA medium length, and EMA fast length. Okay, there we go. Okay, calculate the EMA. We'll go here. We'll go EMA slow, a medium, a fast, and then we'll get the actual numbers. EMA slow, EMA medium, fast. There we go. And we'll make this another exit criteria, right? So if all of these cross, right? So I think it's fast is below medium is below slow, right? And and I think that's all below. Actually, I don't think that matters, right? So check. So sell if the EMAs all cross each other, right? So it'll be something like this. It'll be if EMA fast. I don't know if this is going the right direction, right? We're saying if the fast is above the medium and the medium is above the slow, right? But I think we want to actually go in the opposite direction to sell, right? Because we want to see if the fast is below the medium and the medium is below the slow, right? I think that's our exit criteria, right? Correct me if I'm wrong. I think that's the case here. So we'll rerun this. And we'll see if that makes a good difference in our algorithm. Right. Yeah, okay. So we got a sell here. So this actually gets called pretty often. Right. So let's see if this actually makes a difference here. In the meantime, I'm going to read what you guys are saying here. Yeah, we should be able to cut it apart according to periods, though. Probably a difference in price are too small, though. Might be good for market making, though, quantitative. Yeah, it makes sense. That makes sense, Dave. Okay. So we're almost done this. Let's see what the results are. Oh, I don't think that was a good modification. When we put that in, we actually have now, it's actually losing money now, right? So that was definitely not the right way to go. Right? Let me know if you want to change that. Oops. So the question is here. So use a 5-period day band and you will exit more often, but will have more trades to make up for the difference. Okay, do the opposite. Okay, so all right. So I'll try do the opposite first, just because we're on this, and I'll try doing a shorter period as well. Right, so pretty cool. Once we have this built out, it's pretty easy to modify and try different things, right? I'll add that to this. Fast, medium, slow. See if we reverse these, if that helps. If the fast is above the medium and the medium is above the slow, that could be an exit. Right. Use a 50, 100, and 200 EMA instead, since we're using a day strategy. Okay, we can try that. All right, so this is reversed. This seems to actually work better, right? So we actually, seems like this is a much better strategy than at least the opposite direction, right? Sharp ratio is still not very good, right? It actually dropped, but it seems to be a little bit more stable. So at least we're not having this crazy drop like we did with the other one, right? The other one performed very well, but had a pretty scary drop in the middle there. So now you guys are saying try 50, 20, 50, 200, or have two EMAs, 20, 50, and 50, 200. Okay. So let's try the first one. So we'll go 50, what was it, 50, 100, and 200, I think you guys said. I have to move our start dates as well, if that's the case. Yeah, 50, 100, 200, 20, 50, 200. Right, we'll try both of these. Right, 200, 150, and we'll have to move this date to be 1 year ahead. All right, so we'll do this in 2012 because we're going to need that 200-day period. And if it hasn't been around for 200 days, we won't be able to get that EMA. So we need to at least start in 2012. Let's see how this works out. On this, and I'm not sure which way you mean to keep these the same way, right? Or if we reverse these, but let me know. We could try that out. I'm going to close some of these. Let me close that one. Let me close this. Trying to clean things up a little bit. Crossing downward, though. Use a 5-period band crossing downward. So I'm not sure what you mean by that. So we could change the Bollinger Band to 5, right? And then you mean crossing downward for the EMAs, I'm assuming. So here we have that. This doesn't look like a very good strategy right now. But I'll try it. I'll try 5, and I'll try crossing downward, like you said, Dave. Okay, so let's reverse this. Right? If the fast is crossing downwards, and medium is crossing downwards. That's our exit criteria. All right, and now let's run this again. Okay, so you guys see kind of, this is what our live algo hours will look like, right? We'll basically be looking to find where's a good strategy, how can we find something that works well, that makes good money, right? And we'll be able to go back and forth and chime in and try to actually get to something that works well. Okay. And I think after this, maybe we'll call it, right? Just so you guys can see that. And if you guys subscribe to Live Algo Hour, you can actually get access to this code, and you'll be able to run this yourself and play around with it yourself as well. All right, so we got one here. This looks a little bit more interesting. It did quite well for a while, and then that big drop. We keep getting eaten alive by this big drop. All right, I think that's the biggest thing that we need to figure out. Yeah, there you go. 5 Bollinger Band. I'm going to try this without the EMA. I'm just interested to see how the 5 works by itself. All right. Let me know if you guys have any other ideas, but I think we'll call it here. And if you guys want, you can actually get this code. Like I said, if you guys sign up to Live Algo Hour, you guys can actually get this code and start playing around with it yourself and see what you can do, if anything, to make it a lot better. Yeah, that's why I don't like bands for entering and exiting. It's codependent on the general market direction. Yeah, that makes sense. I think some sort of like a weighted, like a volume weighted type thing would make a lot of sense too. Oh, this looks pretty good. I think just the 5-day Bollinger Band looks a lot more interesting. I think it's our best one yet. Yeah, or 27.65. The 10-day was better than this, but this is actually pretty interesting too. The 5-day Bollinger Band, right? The only thing is that we have this big drop on this one day, right? If we could find a way to get around that, I think we could be quite a profitable trading strategy. Right, so you see that there's this big hard loss here, but in all other times is like this consistent upwards moving trajectory. So I think if we were to like diversify or something, maybe we'd have another asset in here. If we were trading like the SPY or something, and then we allow it to just rebalance periodically, right? Then I think this would be a really good way to juice a strategy. I think there's a lot of interesting things that we could do with this, right? So just because it's volatile like this doesn't mean that we can't use it, right? It's still making very good returns, like 30% returns, right? So I think this would be a very interesting strategy to put into a mix with diversifying, with other diversifying assets, right? Okay. Use the VWAP and buy after cross up with the band, but sell after cross down the VWAP downwards. Yeah, we're having some issues with the VWAP there. You guys are asking about the VWAP, but like I just tried going through that. I'm not gonna spend the next little bit trying to figure that out. But again, we could do this in future classes too. If you guys want, we could return back to this and actually even push this thing forward. I'm going to look into VWAP and how to run that calculation as well. If we're in 33% drawdown exit, okay, that actually sounds like a pretty good one. Worth if we're in a 33% drawdown exit. Okay, I think we can do that. That actually I think will work quite well. Worth. I think that's actually a very smart thing to do. So let's add that in. So we'll set we'll go like this. We'll go highest self dot highest portfolio value, right? We'll go equal to self portfolio value. Something like this. So we'll get it to always get our highest portfolio value. That way we can know if we're in a drawdown. If we're in some significant drawdown, then maybe exit for some period of time. We'll self dot highest portfolio value, and we'll get this. We'll go equals self dot trying to find here what this is. Well, it was set to $100,000 because that's how we start off usually. 1, 2, 3, 1, 2, 3. Okay. That'll be it, and then we'll say, okay, we'll go exit, sell if we are in a 33% drawdown, right? And wait for a few days. Tapped again. Okay, so I'll make something like a countdown timer, right? We'll say how many days, right? We'll go self dot count down equals 0, right? Say days to wait, right? We'll say wait for like 10 days or something. If market conditions are just really bad, just exit for a while, right? If portfolio value is less than highest portfolio value, okay, if countdown is greater than 0, self.countdown minus 1. All right, so we'll do something like this. Countdown equals days to wait. Okay. And then we'll have something like this up here. We'll go basically if countdown, right? If countdown is greater than 0, and then we subtract 1 from the countdown. Okay, perfect. Right, so we'll run it like that. Okay, so basically if we fall 33 or 30% from, or 33% from the top, right, then we're going to exit and stay out of the market for a little while. Right, I think this will actually work quite well. Just knowing the history of this thing, right? Right. You could change the bands to 3 standard deviations for entering and exit on the top band for 2 standard deviation. Use a 5 period again, though. When the price crosses below 100 period EMA, exit that position. Yeah, we could definitely do that. I'm gonna leave it at this. Like, there's a lot of ideas here. You guys have a lot of great ideas. It's fantastic. I'm gonna leave it at this one though, because it's starting to get a bit late, right? You know, I think we kind of got a pretty good point as to how this is going to be running. And if you guys sign up, you guys can actually use this code. So here we're gonna run that, and then it basically exits for a little bit. 33% drawdown. A few times is happening. But I think what we'll have to go, also have to reset self dot highest value equals, yeah, we'll have to reset. I think it's triggering too often. It'll just never come out of the drawdown, basically. Because of it, if it's dropped that much, it's not going to enter back in. So we'll have to do something about this. Cool. So for you guys, if you want to, so you guys are trying to ask about this. If you want to join the live algo hour, this is how you join the live algo hour. Okay. I'm gonna just let this thing run. If you want to join the live algo hour, this is a link, right? So Eric, you're asking about that. That's a link to live algo hour. If you guys want to sign up to it, just click on that link, go down here to the bottom of the page, hit add to cart, and do the checkout process, right? That's how you can join the live algo hour. Basically, these sessions every week, we'll be going through that. And then, just 1 second here. It looks like that that thing messed us up a bit. We entered back in here. I think if we exited for a bit longer, maybe days to wait is like 20. Right, I'll run this again. It's kind of fun playing around with this, right? Like seeing what we can do to make this thing work better. But yeah, so if you guys want to join the live algo hour, that's it. And then we also have our algorithmic trading course if you want to learn like the basics of this stuff as well, right? So live algo hour is exactly this format that we're doing once a week, right? And then if you want to learn the basics of algo trading, then those classes, we run them pretty frequently as well. And you can just watch the videos, or you can join our live class. There's a bunch. So I put these two out there: live algorithm hour and our algorithmic trading course. Right. And Dave, yeah, I could post this code into the algo course if you want, so you can play around with it a bit. But in the future, these classes are only going to be available through live algo hour. We're going to keep the code separate, right? So if you want this code, you're going to have to go into live algo hour, because that's where we're storing all that stuff. Yeah, and this is, yeah, we're going to have to change this a little bit. I personally thought, you know, the 10-day Bollinger Band was the most interesting so far from everything that we did. All right, this one's beating the S&P by a little bit, but it's quite volatile, right? So I think that there's definitely some ways that we can tweak this to make it better, right? But I'm gonna leave it at that for today, right? Just because it's been, you know, almost 2 hours. I want us to leave a little bit of time for questions, right? If you guys have any questions, I could put this code into the algo trading class for this week, but next week, starting forward, we will be keeping this code separate, right? So the stuff that we do in live algo hour, we're going to keep there. If you subscribe to it, you can get that. And then all the stuff that we do within algo trading course, we're going to keep there, right? Okay, no problem, Dave. Cool. So definitely fun session, right? Definitely encountered some pretty cool stuff there, right? I think we're on the cusp of making an algorithm that could work pretty well. I mean, I would personally actually use the one that does the 10-day Bollinger Band, right? Because that one was actually getting really good returns. And even though there's this big drop, I think there's ways that we can deal with that, right? If we're just diversifying well, put a little bit of money into bonds, put a little bit of money into stocks, and put a little bit of money into this, and then rebalance on a regular basis, I think this could be a very interesting strategy. I think that could make us quite a bit more money. So we did the building part. We did some tweaking. We messed with the results a little bit. Okay. So last but not least, do you guys have any questions? So what did you guys think about all this? Do you have any questions around the live algo hour? Any questions around the algo that we built today or anything else? Just let me know. I know you guys have been asking questions the whole time. It's been very interactive. That's awesome. I love it having classes like this. But let me know if you have any other questions as well. I'm also going to put up feedback for this class. I'm going to put that in here as well. If you guys click on this feedback form, it takes literally like a minute or two to fill out, but it really helps me a lot with improving these classes. Like if you ever taken any of our classes, you know we're really big into improving everything. That's why we keep getting better and better. But if you go through this, the link, right? How would you rate the class out of 5? Right? What's your email? What did you like about it? Right? What did you not like about it? And then what would you like to see in the future? Right? And we're going to keep making these things better and better and better. This is the first time we ever did this, right? So I think it went quite well. We came up with a pretty interesting strategy here. But in the future, we'll be able to do even better. Because like I said, we're releasing a brand new feature for LumiBot that's going to make it really easy to backtest some of these things. So I'd love to actually try some of those option strategies. It'd be very easy to do. I would love to try some of these other strategies where we could try different time frames, right? All that is going to be possible starting tomorrow. Right. Cool. Thank you. Yeah, definitely a great session. Definitely had fun with you guys here. All right. Okay, so let me know if you have any other questions, right? I put down this feedback for the class and hopefully see you guys next week in Live Algo Hour. If you guys sign up today, then next week when we have this thing again, you guys will be able to join in and we'll be able to either keep working on this algorithm or work on one that you have in mind. We'll be able to build that out. And again, it's going to be over Zoom instead. So because it's over Zoom, you'll be able to share your screen and actually show me graphs or like speak. So I think sometimes it's kind of difficult to say these things. I didn't think about this beforehand. It's the first time we did this. Basically, you'll be able to turn on the microphone and talk about these strategies because some of them, you know, you might need to elaborate a bit. So I think the Zoom session will be much, much better than just typing this stuff out. But yeah, hopefully you guys like this stuff. And then if you sign up, I will see you next week in the Live Algo Hour. All right. Thank you guys. Hope you have a good night. And yeah, and just I'll post this link one more time here so you guys have it handy. All right, and we'll send out an email around this as well. All right. Cool. All right. Hope you guys have a good night. And it was a pleasure. This was fun. Later, guys. Thank you.